Okay, so we're getting down to the last little bit that you need to know about auto insurance. This one's very simple. This is just payments and policy periods. So payments and policy periods. With the payment situation, we've got typically two options. There is the pay in full or there is the monthly payment. So pay in full just simply means you pay the entire premium up front. Monthly is you pay monthly. Super simple, right? The options are an EFT, or we can call it a bank draft, or we can call it an electronic check. This is where you give your routing number and your account number, bank info is what I usually call it. You give that information to the insurance carrier and they just draft whenever you've agreed to, basically. So if you are on full pay, you can do EFT. If you're on monthly, you can do EFT. And sometimes there's a discount for EFT and sometimes there's a discount for full pay, and you can double up on those. So if you're comfortable paying in full, then also look into that EFT and see if that's right for you. The other option is credit card. And so this would be, it's automatic is what I'm dealing with here. So an automatic credit card payment, let's say it's monthly, same thing as EFT. They're gonna hit that credit card once a month on the day that you've agreed to for whatever the monthly payment is. Sometimes this is less expensive than the old-fashioned way of mailing everything. It's usually more expensive than the EFT because they've got fees involved. There are some companies that, as long as you are doing the pay in full, so you're getting that discount, they'll let you do an EFT or a credit card, same price. So that's kind of a little benefit there. Maybe you get miles or you get points with your credit card. So you go ahead and put that on your auto policy, pay it in full, get all of the benefits, right? So those are your two automatic payments. I really recommend doing either one of those. The other way is the old way of mail, which back in the old days, they would mail you a piece of paper that told you how much to pay, and you would write a check. And for those of you that are out there that don't know what a check is, that's this little piece of paper that says you're going to pay this much money to that company. Then you stick it in an envelope with a little piece of that thing they mailed you, and you put a stamp on it, and you stick it in the mailbox, and you're paid up. That's how it used to work, right? And some people still do that, and some people still like that. That's fine. That's the most expensive way to pay for auto insurance, which is the only reason I don't like it. Here's the one big problem that people are starting to run into, the people that want to do mail and check, and that is it's really not mail anymore, it's email, and then they're going to mail a check in. But if you're used to doing this method and now you're switching to electronic instead of them actually mailing you the bill, it's real easy to get behind because you just forget. You don't have that monthly reminder that, hey, I've got a bill to pay. So I don't like doing this way. It's the most expensive. I mean, you have to buy a stamp, and that's getting more expensive every year, it seems. So don't do that if you can avoid it. I recommend doing the automatic draft or the automatic credit card. It is possible that you can sort of do a hybrid of those where you're technically on an emailed bill that you have to pay. It's not automatic, but then you pay with a credit card or electronic funds transfer. But it's a little bit of a hassle. So I like the automatic payments. It takes all of the time out of the problems with time of not getting the payment in on time. And some of these companies will terminate your policy real quickly if they don't get paid. So those are your payment options. Whatever works in your case, that's what you go with. Now, the other thing is policy period. So a policy period is just simply how long that one contract is going to last. In the world of auto insurance, we have 6 month and we have 12 month. I actually have a carrier that will do 1 month, but that's for special occasions, basically. So you can either do 6 months or you can do 12 months. The benefit to 12 months is if there's a rate increase, it won't hit you for a year. With 6 months, that rate increase hits you at renewal. So you start a policy, and a month later they raise the rates. You're going to have 6 months of coverage after that at a higher rate. 12-month policy, 1 month in, they raise the rates. You don't have that bigger payment until a year. So that's one of the benefits of the 12-month policy. Another benefit of 12 months is you don't have to deal with anything. The cards last for a year, the pay plan lasts for a year, everything stays the same for a year. So it's a little bit easier. One of the things that I like about the 6 month policy though is if we're going back up here and we're paying in full, there's a lot of people that can't afford full pay on a 12-month policy. So go with a 6 month policy, do the full pay, 6 months later, do the full pay, just breaking it up into a smaller chunk to make it more manageable. One of the interesting things is occasionally I'll see a quote where the 12-month policy ends up being less expensive than 2 6-month policies. In other situations, the 2 6-month policies end up being less than the 12-month policy. And there's a couple of reasons for that. Maybe they feel like, hey, you have to pay less with 6 months because we think we may want to increase rates. Or maybe with 12 months, they're like, hey, we'll give you a better price because we want to have that contract for the year or something like that. So, but anyway, whatever you do, there's benefits to both of those, and just a real quick conversation to have about which one fits with your budget and your timing and your needs. But that's it. Payments, policy period, simple stuff, but definitely something to think about because it can make a difference the way you make those decisions. So there you go.